probably right about here, still in undervaluation. I say that if they were going to do an overnight revaluation, because that is when we will see it move toward its fundamental value. Because what gold and silver are the flip side of the fiat money, the debt-based money. So it's easy enough to go ahead and say, okay, how much debt is there in this world and how much gold is there in this world, even with the new gold find in China. Anytime you get physical, there is a finite amount, period. So it doesn't really matter, but you look at this, and I know that gold is really worth somewhere north of $40,000 an ounce, and silver's worth somewhere north of $2,000 an ounce. 26, 2,700, 3,000, or at $30, it's ridiculous.
The gold market is under immense pressure, driven by surging demand from the East and rapidly declining Western reserves. Throughout 2024, unprecedented outflows of gold from Western vaults have led to severe liquidity shortages, with refinery delays extending up to 12 weeks. Despite official reports suggesting stability, much of the gold stored in London is already allocated, forcing the U.S. to scramble for bullion to maintain its fractionally backed reserves. The widening gap between paper and physical gold prices continues to reveal structural weaknesses in the market, increasing the likelihood of severe price dislocations. Gold's recent surge past $2,850, marking its 7th consecutive all-time high, underscores the fact that physical demand is far outpacing available supply. With Asian central banks and sovereign wealth funds aggressively accumulating gold to reduce reliance on the US dollar, the West is losing control over a market it has long dominated. Lynette Zang, chief market analyst at ITM Trading, has long argued that financial markets no longer reflect genuine supply and demand, but are instead manipulated by major banks and institutions. With inflation steadily eroding purchasing power and central banks quietly accumulating gold for years, their grip on the market has reached an unprecedented level. In 2024 alone, central banks purchased over 1,000 tons of gold for the 3rd consecutive year, accounting for nearly 20% of total global demand, an unmistakable hedge against growing systemic instability. According to the World Gold Council, total physical gold demand hit a record 4,974 tons last year, reinforcing the growing realization that fiat currencies are rapidly losing credibility. As market interventions become more transparent, suppressing gold and silver prices is becoming increasingly difficult. Lynette estimates that gold's true value exceeds $40,000 per ounce, while silver, long undervalued, could experience explosive price movements as industrial applications, especially in solar panels and electric vehicles, intensify demand. With silver inventories running critically low and its historical role as a monetary metal being re-examined, the potential for a major price reset appears inevitable, signaling a dramatic shift in the global financial order. We present the clips of Lynette's insights from her recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Being a catalyst is the inflation and the public waking up, because these global central banks have shifted their policy and actually been accumulating gold since 2005. Which I think is rather interesting because nobody noticed it until 2010. But of course, it was the crisis that made it apparent to everybody. So I think for the public, we've got more younger people that are coming into the gold and silver market, which is so inspiring to me because it's not us old people that are going to create this revolution. It's the younger generation that will do that. So I think that's also a catalyst for silver. And you know, silver, most undervalued metal. Look, these markets are not a place where you can get any level of good price discovery. Everything has been turned into a trade. If you think when you pay your utility bill that that's actually supply and demand, think again. When you go to the grocery store and you buy your food prices, everything is being guided by traders. That's how the banks make most of their money these days, not from lending, but from trading. So I think that that it'll be the inflation, because I think this year we're going to see a lot more and a lot faster inflation, and the public starts to notice it. So I think it's public buying that's going to push it, because central banks have been buying and accumulating it for a long time. But the other thing that I'd like to point out is, if it's so many people are manipulating these markets, why don't we still have $400 gold and $5 silver? So I think that is an indication of an expanding market. And that actually gives me a whole lot of hope. And I think both metals, I mean, you look at the fundamental value, because one thing I learned from my Uncle Al, and when you're dealing with hard assets, is it always goes from undervaluation to fair valuation to overvaluation, like this continuous figure 8, right? An infinity sign. And so where are we now? We're probably right about here, still in undervaluation. And I say that if they were going to do an overnight revaluation, because that is when we will see it move toward its fundamental value. Because what gold and silver are the flip side of the fiat money, the debt-based money. So it's easy enough to go ahead and say, okay, how much debt is there in this world, and how much gold is there in this world, even with the new gold find in China, right? Anytime you get physical, there is a finite amount, period, right? So it doesn't really matter, but you look at this, and I know that gold is really worth somewhere north of $40,000 an ounce, and silver's worth somewhere north of $2,000 an ounce. So at $2,600, $2,700, $3,000, or at $30, it's ridiculous. Having said that, though, I think what we're headed into, and I think it's already begun, is the hyperinflationary depression. And I've looked at enough hyperinflationary circumstances, and you see that gold-silver ratio gap go more and more narrow, but then toward the end of it, gold expands because gold is the primary currency metal. Silver is used in manufacturing as well. Gold is recoverable, silver is a diminishing asset, gets used up. So there is really no good justifications for the prices, but I think it's public participation that will push that. And I could easily see silver, I mean, it could have happened this year too. But what you can't control is how much gold and silver is created by these contracts that do not and never will exist.
Lynette Zang raises concerns about the true nature of the Brics currency, emphasizing that its primary focus seems to be automating cross-border trade and ensuring instant settlements rather than empowering citizens with real financial sovereignty. While Brics nations promote de-dollarization, the push for tokenization and digital trade may not decentralize financial power, but instead shift control to new authorities. Without public oversight or the ability to convert the currency into tangible assets, the system risks reinforcing centralized control rather than offering a true alternative. Though framed as a challenge to Western financial dominance, the real question is whether this shift will genuinely address issues like inflation, currency devaluation, and economic inequality, or rebrand the same structural imbalances under a different system. Lynette also questions the claims that the Brics currency will be backed by gold, pointing out that partial backing without convertibility does little to protect citizens from monetary manipulation. She argues that if people cannot exchange their currency for physical gold, then the system remains fundamentally flawed and vulnerable to the same abuses as fiat money. Reports suggest that the Brics unit may be 40% backed by gold, but Lynette believes that without a mechanism for the public to redeem it, such backing is merely symbolic. She believes true financial reform would require a system where people can hold their leaders accountable by demanding real assets in exchange for their money. Without this, the shift to a new monetary order could end up being just another illusion of change.
The Brics currency is really about cross-border trading, everything being traded and atomically traded, right? Which means that as soon as a transaction happens, everything settles. So I know they want to tokenize everything. I'm sorry, but I don't really see the Brics system to be a whole lot different, because I don't see the governments over there taking better care of their citizens and the citizens having a whole lot of freedom than there are anywhere. But they want us to think it's them against us, so that you have a common enemy and it's divide and conquer. And I want to do just the opposite. Everybody here wants the same thing. They want to have a safe place to live, raise their family, have opportunities, have real opportunities. I read about the unit. It's supposed to be 40% back, but again, not convertible. It is so key that people understand the difference, because what is pegging? Pegging is just using the manipulated price of the spot markets anywhere. So I don't really view it, frankly, as them or us. I think that whatever country truly comes out with a gold-backed currency, that you and I, as a citizen, if we don't like what we're seeing them do on Capitol Hill or anywhere in government, you walk in with one currency, you pull the gold out of the system. That's what creates those restrictions. That's what I think we need to really be fighting for, not just having a government say, well, this currency is backed by gold. Because how do you prove it? How do you really prove it? Do you know how much gold is in Fort Knox? It doesn't mean anything.
It hasn't been audited since the Eisenhower administration, yeah.
So, and it hasn't changed even 1/16 of an ounce. So how do you know? So yeah, I don't view that as a huge threat. Definitely power is shifting. But I say, let's take our power back. Let's have it shift in the right direction. Not from one bad government to another bad government, but from the government to the people. The Constitution supported the people first, and then the state's job was to uphold and support the public. And then the federal government's job was to support the states who were supporting the individuals. It's been all turned upside down. Let's turn it back. And for me, it's not about prices. I want to protect and preserve my purchasing power. So a really, really good point is that this is completely outside of the system. That's why no matter what other choices you make, if you have those intangible assets, and you know, there are a lot of people that believe in the cryptocurrencies. I believe that they are here to stay, but that they are a Trojan horse so they can make this shift. Right? Because that's how they do it. They keep things looking as normal as possible. But gold and silver in your possession is virtually invisible. It's virtually invisible. Nothing else is invisible. And what they have in mind for it takes even that, if you allow that, and makes it more accessible, which means what do governments want? Taxation. They're talking about having the ability to do lifetime taxation. You need things that are just, you hold it, you own it, it has the broadest base of buyer. That's the other thing, right? This is used, both of these, gold and silver, are used in every single sector of the global economy. Well, let's think about that. What that means is you have the broadest base of functionality and the broadest base of demand. You tell me any other asset that does that. There isn't. So you become your own central banker, right? You're going to count on them to look out for your best interest, because if you are, I have this bridge in Brooklyn that we could discuss, right? It doesn't happen. They're not going to look for your best interest. You have to do that. But that also comes together with community, right? And the importance of community, because we are not an island. We are really all together on this planet, and coming together, we have the power, we have the strength. But yes, gold and silver in your possession maintains your ability to purchase, because this is a wealth transfer mechanism. If you have everything in fiat money, you will not be able to take advantage of the opportunities that will arise when this debt bubble becomes, it's already popped, when it becomes apparent. But there are opportunities ahead for those that are holding physical gold and silver outside of the system. Be one of them. Don't let those that are in power have all of the opportunities.
Monetary instability is accelerating, pushing the global economy toward a tipping point where traditional currencies face unprecedented pressure. With U.S. debt surpassing $36 trillion in 2025 and government spending showing no signs of slowing, central banks are left with no alternative but to print more money, further eroding the value of fiat currencies and increasing the likelihood of hyperinflation. While political changes may create temporary optimism, the reality is that no leadership shift can undo decades of financial mismanagement or restore stability to a system already beyond repair. As purchasing power diminishes and confidence in paper money weakens, the urgency to preserve wealth through tangible assets becomes undeniable. Gold and silver, long regarded as safe havens during economic crises, are once again proving their resilience as the ultimate safeguards against a collapsing monetary system. Unlike fiat currencies, which can be printed indefinitely, these precious metals hold intrinsic value. They cannot be manipulated in the same way, making them a crucial hedge against inflation and financial uncertainty. Share your thoughts on Lynette's analysis in the comments section below. If you find this video informative, don't forget to support your finance log team and turn on notifications to stay informed about our latest videos. See you in the next video.